Good evening, traders. This is Christian from Hertz Tribeca Trade Group with your midweek macro newsletter. And tonight's video is going to be the good and the bad. We've got a lot of bad things going on in the marketplace the last couple days, but there's a couple good things going on. So let's start with the bad news. The bad, first of all, is as you know, I track ETF fund flows on a daily basis, and I will definitely go to this whenever I see something interesting going on and take a look at what's been happening over the last week. Huge amount of outflows. If you're part of the Tribeca Trade Room, you know I've been talking about the last couple days. The biggest outflows in equities that I've seen all year long in a short amount of time frame. So it's $12.8 billion, essentially $13 billion coming out of equity ETFs in the last 5 days. And it's been pretty steady. There's been about $2 or $3 billion coming out a day. I just refreshed this data for tonight. So it's Wednesday night. Bloomberg does refresh this data at night. So you're getting some fresh data. And you can see another $4.2 billion were taken out of ETFs. That is, all of equity flows, basically, that money came out of. So where is this money coming out of? So let's start there. I've got a couple different cells highlighted here. I'm going to point to, first of all, the 5-day change. I'm talking about 5-day flows, and then I'll talk about what's happened just in the last day. So going down to the bottom of my spreadsheet, which has all of the biggest outflows, I have highlighted in gray here the biggest index funds. They've been showing huge outflows. For example, SPY, which is the largest ETF by assets out there, $6.3 billion. So that's roughly about half of the outflows. So that's been straight coming out of the S&P. That's about 3.4% of the fund. This column that I have highlighted right here is the percentage of the fund that's changed. So that's 3.4% of outflows, 3.4% of the fund essentially decreasing in SPY. What's a little bit more noticeable the last week is, and again, this is pretty new. I haven't seen any major outflows to high yield bonds, but HYG, the high yield bond ETF, that lost $2.1 billion. And that's nothing to sneeze at. That's about 12% of the fund. So that's a large chunk coming out of HYG. I also have highlighted EZU. I'll get to EZU in a minute. Let's talk about HYG first of all. And I want to talk, I'm going to talk a lot about weekly charts in this video. HYG, if you look at the weekly chart, take a look at where we've risen up to. So we had a real nice balance, like a lot of areas of the market in the middle of February. But look at how far we've gotten here. Just to the bottom of value. If you're familiar with value areas, that shows where a lot of the buying and selling has taken place. And we have not been able to get into value. That is bearish. If you get to the top of value and it gets rejected, that's your sell signal. So that's what we're seeing right now in HYG. We have only gone this far. We're still above my short-term moving averages. So the story isn't over for high yield bonds, but it doesn't look too good. The next thing that I've seen that has had a lot of outflows is Europe. Europe has had outflows all year long. If you take a look at this EZU ETF, I have been noticing some big blocks going up in cash. You could always check to see, you never know 100% sure if those blocks are buys and sells. You can kind of make your own conclusion, which I have believed that the blocks in EZU that have been hitting the tape recently have sells. You could see that in fact there has been outflows, so that confirms the activity in EZU, and that's about 6% of the fund. That's $720 million coming out of this European ETF. Another chart to look at, very similar, a rise up here in European shares over the last couple of months, but again, not being able to get into the value area, another bearish sign. So that could be as far as we get in some of these areas. You can actually draw a trend line right here, and you can see that we have not been able to get over this trend line either. Another area of the market that I wanted to go over that I have written down is financials. We did see a couple of big blocks in the XLF ETF. Very similar theme. I'm sticking on the weekly chart here, and just like high yield bonds, just like Europe, XLF has not been able to get into the value area. I do like XLF as a short right now. I think that this may start heading down. And notice it got to this trend line, got rejected. This is at the same point of the bottom of value. So I think XLF may be a decent short right here. EasyU could be a good short here as well. Another thing, as I mentioned, I was going to talk about the bad here first. Another thing I think particularly troubling is what's going on in the biotech space. This feels very similar to what happened. I'm going to shift off the weekly chart here. This kind of felt like, could be one of the last soldiers to advance, as biotech is I believe the worst performing sector in the market. Let me just take a closer look at that just to give you the raw data on that. And you could see year to date, the XBI ETF is down 25%. So some pretty bad performance there. And take a look at what we've been seeing here the last couple of days. No major news other than, I know Gilead reported last week, Celgene reported last week. Gilead really sold off last week, but Gilead is not a big weighting in the XBI ETF. And you can see this thing really start to crumble here. Some big red candles going on here. And it just kind of gives me reminders of what we saw in the beginning of the year, this big slide that we saw in biotech shares. So this is not oversold yet, which is particularly troubling. And if we don't see a bounce here, I think that's a troubling sign for the marketplace. Kind of the canary in the coal mine as it was in January. We're also seeing just heavy selling going on in this space. One last bearish chart, the Baltic Dry Index. This is something that people were fixated, that really had some big declines here for about a year. And we've seen the last couple months a nice rise in this, but this also looks like it's getting faded here and dropping back to the 200-day moving average. Another chart to keep an eye on is this Baltic Dry Index. So let's take a look at a couple of the major indexes. Let's take a look at what S&P is showing us. I'm just going to switch right now, first of all, to the daily chart. So what we saw today is we did not break below value. We actually just did barely in S&P futures, but we came back here and we are rallying a bit overnight. We're up 33 basis points. Let's see if that holds into tomorrow morning. But the level that I'm watching short-term support is 2041.75. That's in S&P futures. If we break below this, we've got more to the downside. And notice we are not oversold at all on the RSI. We're kind of right in the middle of this chart. If we break that level, we've got quite a bit of distance to go to the bottom of value on the weekly chart. So the next level would be, if we break 2041, is 2015. But we're getting ahead of ourselves. We have not broken this value. If we bounce, all is okay in the world for the time being. So that is a level that I'm watching in S&P. Also, small caps. I always like to look at small caps because I feel like they sometimes lead the market. The IWM ETF, very close to the bottom of value too. So I would watch 110.09 as short-term support there. If we can manage to bounce from that, I think a decent sign for the market. If we break, we've obviously got some more downside to go. Also, not looking oversold at all here on IWM, particularly troubling. So if we do get a little bit of a bounce on Thursday, I don't think we're out of the woods yet. What I think could be setting up for a nice bounce to play. So now we'll get to a little bit more of the positives. One sector that is getting close to oversold is technology. That is about a 32 on the RSI. This has had a really steep decline over the last 2 weeks. However, I do think it may set up for a little bit of a Thursday bounce. The FANG stocks acted pretty well on Wednesday. Amazon did pretty well. Facebook did okay. So we could see a little bit of a bounce on Thursday. And, I'm not sure if we're going to see a move lower thereafter. So what else? I did have one more bearish chart, and then I'm going to talk about a couple more positive things. The industrials ETF, I'm going to get to this. But I want to talk about the US dollar. US dollar, this is something that I've been very focused on over the last couple of weeks to see if we are going to maintain support. We did break support. We did break the weekly value area that was right here, and we did this with conviction. However, the last couple of days we were putting in a hammer candle on this weekly chart. We're also seeing this hammer bar. Again, this is the US dollar futures. Why I look at this, why I think it's so important, because it's got many implications for multinational corporations such as the industrials. Also the commodities. The commodities have rallied very nicely with a weaker dollar. If the dollar stays below this trend line, commodities may be okay. Same thing with industrials. If the dollar starts to get stronger and gets above this line, you may see some more pain going on in commodities. You know, I think it was copper is a very interesting chart too. If you go to the weekly chart, you know, another area that could not get into the weekly on the weekly chart, the value area here. I was actually looking to go long copper the other day. If this thing, I never did, I was waiting for confirmation for us and a good signal if this thing got into the value area. It did not. It got rejected right at the bottom of value. So keep an eye on a couple of those things there. Keep an eye on the dollar. If the dollar does get stronger, I also like a short in the industrial sector. I think this may have some more downside. Notice on the weekly chart, it tried to break out and failed. So we could see a move all the way back to the bottom of value, or at least to the yellow line, the point of control. So again, I am waiting first for, you know, a stronger dollar to confirm that. For the time being, I do like going short financials here, as well as Europe. So on the positive side, you know, what's been happening in gold the last couple of days, a little bit of a pullback in the last couple of days. You know, this is something that I have been involved in gold earlier in the year. I currently do not have a position, and I'm waiting for, you know, I'm not sure if that's all the pullback that we're going to get in gold. But if we do see a move back to the top of value, that would incline me to get long gold. We also saw a lot of short dated put buying today in GLD, the gold ETF. Again, you know, just going out to 513. So maybe somebody thinking that there's going to be a continued weakness in the short term in gold, which is fine with me. I would be looking out to January to get long gold. Same thing with silver. If you look at the silver chart on the weekly time frame, this broke out. And then it's falling back here. So as long as silver SLV can maintain the top of value, if it doesn't decline too much further, I would be looking at going long silver, but want to make sure it's at a crucial point here that, and you know, I don't mind being a little bit late here. I want to make sure that this thing bounces a touch before I get involved. So I did say I was going to talk about the good. Take a look at what's happening in oil after the market. You know, notice we had oil inventories this morning. We have completely shaken that move out this from this morning, and all after hours, oil has been rallying. So up 2%, obviously very positive. If oil continues to go up, it'll be a very difficult task for the market to go lower, in my opinion. So, you know, keep one eye on oil continuing. If oil continues to move higher, definitely positive for the market. One last thing to focus on is on bonds. Again, this is a macro video, so I do like to focus on all these things. We are seeing a bit of a breakout going on in the TLT ETF. This is what TLT looks like on the daily chart. It was weak a couple weeks ago, and it has moved back into the value area. So I would be looking for possibly in TLT a move to at least the point of control, maybe all the way to the top of value. Again, if this happens, if bonds go up, what happens? Yields go down, utilities become very attractive again. Take a look at the utility chart. Very, very strong today, up 1.1% today in a down market. Notice what's the price action the last couple of weeks. You know, after a big run up, it did consolidate here a bit, but notice we were almost right back to the highs in utilities. So they may be poised for breaking out the highs. That's 49.88. Also consumer staples also very strong, but utilities is what I'm watching here in a breakout. 49.88 is the level to watch in utilities. So that's it for tonight's video. That is the macro video. Please visit Tribeca Trade Group for all of our specials. All of our products indicators are on there, as well as new videos and newsletters. Thank you very much for watching tonight's video, and have a great rest of the week. Thank you.